Hey everyone, welcome back to the Arca monthly crypto market call where we talk about everything happening in the digital asset market. I'm Jeff Dorman, CIO, joined as always by Joey Reinberg, analyst and trader and ops extraordinaire here at Arca. Um, we're going to, for those who are new to this call, what we try to do here is get a little more in the weeds. For those who have been with us for a while, Arca's been around now for 7 years. Spent a lot of the early years educating new investors on just what blockchain is and what crypto is and why this is an asset class worthy of investing in. As investors have gotten more sophisticated, as our partners have gotten more sophisticated, we wanted to do a monthly call to really dig into the weeds of the individual ecosystems of crypto, where we're getting the data, where we're getting the research. For those who want a little deeper dive into the nuances of crypto and are not just looking at it as sort of you're either invested or not. There's certain areas to invest in, there's certain areas not to invest in, and we're using real-time information to make those assessments. So before we get started, quick disclaimer: this commentary is provided as general information only and is in no way investment advice. And we expect you guys to listen to what we have to say, but obviously we're not trying to guide you in what you're investing in. So, Joey, before we get started here, obviously, big, certainly a big week for crypto post the election here. We were actually just talking to our investors prior to the election, saying, October was kind of boring. It was all just, positioning. We get through the election, clean sweep for Republicans, independent of your political views. It is a good thing for crypto in the sense that not only Trump, but a lot of the congressmen who have been voted into office are pretty pro crypto. So as you can imagine, crypto's flying, Bitcoin up 30% or so, some things up even more. Crypto equities flying. But I think we're going to spend most of the time here talking about the individual ecosystems and where we're seeing real growth. But before we do that, I have to acknowledge the fact that Polymarket, probably the most successful crypto app, certainly of the last year, being cited all over the news during the elections. I don't know about you guys, but when I was watching the election coverage, I didn't even know what to trust between different media outlets and different polls and everything. The one thing that people seemed to trust was Polymarket. It was amazing. There was billions of dollars being transacted. It had Trump winning long before the media did. It had individual Senate and House races called before any of the media did. But post-election, the question was, will Polymarket still matter? The data doesn't look great so far. For those who aren't that familiar, prediction markets have been around for decades, right? This is not new. Crypto just found a new way to do a prediction market. But as always is the case, these things tend to have 4-year cycles, get really important around elections. And the question is, can it be sustainable thereafter? So, Joey, other than the data here, which obviously showing volumes and open interest just falling off precipitously post the election, are there any certain areas on Polymarket that are still thriving or areas where you think, you could see growth post the election here?
Yeah, obviously Polymarket is completely driven by politics and is on a 4-year cycle similar to Bitcoin. But besides politics, there's also different markets about crypto and what different prices will be about pop culture, about science, about sports. And I think sports is kind of one of the bigger areas where it can still um, have a big impact on the market and have relatively larger volumes.
Yeah. So we'll see. I mean, again, this is a gambling culture right now. Everything from sports betting to options trading on Robinhood to prediction markets. So I'm not negative on prediction markets per se, but I am certainly curious to see if they can find something else post the election that really has that sort of interest and that sort of volume. Moving away from that, though, getting again into the individual ecosystems, it's been Bitcoin's world for the last couple of years, really post 2022. Bitcoin dominated last year in 23. It's dominated most of the year this year, outside of a few other names in the digital asset space. This chart here just showing just how incredible the Bitcoin ETF has been. Mostly driven by IBIT. That's the darker orange there. That's BlackRock's ETF. But you can see over 40 billion now of assets. Interestingly, the IBIT BlackRock's ETF, Bitcoin ETF IBIT, is now actually bigger than BlackRock's gold ETF. So gold ETF's obviously been around about 25 years. The Bitcoin ETF's only been around a year, and already challenging them in terms of flow. The purple line there being the GBTC, that was pretty obvious. Grayscale was going to lose assets at the hands of the new Fidelities and BlackRocks of the world, but just domination in terms of flows. And I think I don't have the numbers in front of me, but something like 3 or 4 billion came in alone just post the election. So pretty dominant in terms of flows into these ETFs. Not so much the case with the ETH ETFs, although that's been accelerating as well. I think back-to-back days of a couple 100 million of inflows, but certainly it's still sort of Bitcoin's world. But as we're going to move on here, obviously there's more going on than just prediction markets, election, and Bitcoin. There's all these different ecosystems, most of which you're familiar with, from Solana and Ethereum to some of the new up and comers like Sui and Base. Let's get into this, Joey, in terms of Solana, the token, crushing Ethereum, the token, in terms of investments. But what's actually happening underneath the surface that's driving that growth of Solana versus ETH?
Yeah, so right now, there are 9 unicorns that were formed in the Solana ecosystem as applications versus Ethereum's 18. And those applications are Render, Jupiter, Pith, Radium, Helium, Wormhole, Jito, ION, Drift. And all of those are kind of some of them are relatively new paradigms that didn't exist on other blockchains. Like Jito is kind of similar to Lido and Flashbots, which we'll get into in a little bit, but it is a relatively new idea. IONET and Helium are DePIN projects that are completely new ideas on Solana. And Render is a totally new idea with AI video rendering. So like there are a lot of new and innovative ideas that are happening on Solana because of the faster block time and cheaper fees that aren't feasible on Ethereum or other blockchains right now. And that's contributing to a lot of the revenue for Solana coming from applications instead of the blockchain itself.
Yeah, I think that's important, right? Because obviously Ethereum was the first smart contract platform, and then you've had tons of competitors coming out since most of 2021. Actually, was just these launch of other competitors trying to be faster or more decentralized or more secure. And the big thing, though, as we saw all these ecosystems come about, though, is they were just copycats, right? They were all just doing the same thing. Solana does seem to be the first of the other smart contract platforms that are actually having success in areas that no other blockchain seems to be tackling, right? DePIN being the biggest, you could say to some extent meme coins, although that's happening on Base as well. But certainly it's good to see that, right? If you're a big Solana fan, knowing that it's not just the same stuff on every blockchain, that you actually have a niche of some sort, and really more importantly, you have applications that can be built basically on Solana and nowhere else. So
Yeah,
certainly.
and even for borrow lend platforms or perpdex platforms like Drift, they're getting re-rated a lot higher now because of different innovations and ways and novel ways you can build them on Solana that isn't possible on like the EVM or other blockchains. And we saw that in the last week as Drift is up 300% on the token price.
Moving to the next slide here too. I saw that you threw this slide in here. I thought this was interesting, right? This is just showing that the apps built on Solana are generating more revenue now than the apps built on Ethereum. Why is this interesting? Because like my first reaction to this was, well, who cares, right? I mean, that's like, if the JP Morgan app was only available on iOS and not on Android, then all of a sudden, JP Morgan's revenues would, that doesn't help iOS versus Android. That's just really good for JP Morgan that they're a profitable company. Like, why do you think this is relevant in terms of the ecosystems?
Well, I think like fees at the end of the day and revenues are passed down to the end users in most cases. And because they end up charging a lower network fee, they're able to take a larger portion of the general transaction fee as a whole. Because the actual network fee to pay the Solana blockchain is less, they're able to have a higher take rate than on other blockchains, which makes applications more profitable in general.
Okay, so good for the apps that are built on Solana, but let's get into how does this actually help Solana itself. You move into the next slide here, obviously there's a lot of different ways to value a layer 1 blockchain. You can look at both the financial value of it based on the revenues that are generated on the blockchain itself. You can think about the utility value of the token in terms of, is it useful for collateral or to pay gas? You can obviously think of the social value in terms of the cool factor. But when you get into just the financial value and the revenues itself, what revenues are flowing to Solana?
Yeah, so right now, Jito makes up most of the revenue for the Solana blockchain. And I'll just explain what Jito is so everyone's aware. So Jito has two different distinct business lines. They have a liquid staking service that's similar to Lido on Ethereum. So what you do is you deposit SOL tokens, and in exchange you get Jito SOL, and this Jito SOL returns about an 8% yield for you, and it is usable across the DeFi ecosystem in Solana. And to do this, Jito takes a 5% and it's soon to be 6% because of governance fee that's split evenly between the DAO and Labs division. So that's where a lot of this revenue is coming from for Jito itself, but a lot of revenue for Solana comes from the other side of their business, which comes from MEV. And MEV stands for miner extractable value. And that comes from validators running the Jito client. And 90% of the validators currently running the Solana blockchain are running this Jito client. So that's just a piece of software that these validators are using that was created by Jito that helps pretty much process and arrange transactions to eliminate MEV opportunities. And this is similar to Flashbots on ETH, but Flashbots on ETH is a company without a token right now, so it's more difficult to value in that way. And
So
then
this is
Solana
so
has no.
you're moving on to the next slide here then, right? The MEV tips.
Oh yeah, yeah, we could go into the next slide. So the MEV tips, Solana has local fee markets where traders can tip extra money basically to get priority for their transactions. And because of that, and because a lot of sophisticated traders and applications are now paying for basically a flash pass to the front of the line for their transactions, they're that is generating a lot of revenue for Jito and in turn for Solana and Solana validators.
So one of the knocks I think a lot of investors in the space try to make it seem like it's a zero sum. Like if you can't like Solana and also like Ethereum or vice versa, you have to pick one. The reality is, there's a lot of different smart contract platforms doing interesting things. But from a token investing standpoint, one of the knocks on, or one of the things that people like about Ethereum is that it, at times of high transactions, it's deflationary, meaning more tokens are being taken out of circulation, whereas Solana has been heavily inflationary. But you're arguing on the next slide here that essentially that inflation is not necessarily a bad thing, and it's really what's driving the engine.
Yeah, so there's a couple different ways that Solana validators actually make money for essentially running the entire blockchain. And it can come directly from transaction fees that are paid on the platform, but that's relatively small in this case. And then it could also be from MEV tips paid to the validators directly through Jito, which is about 346 million annualized. But a majority of the validator revenue and the way that this blockchain is sustained is currently through new Solana tokens being issued with inflation and being paid directly to validators for running the blockchain. So in some cases, and this is what Sam Bankman-Fried argued, this token inflation is necessary to help the blockchain reach terminal velocity and actually be able to survive on its own.
Right. And Joe, I think you're cutting out a little bit there, but yeah. So what you're basically saying is, well, inflation on a standalone basis, not great, meaning more tokens, which raises the market cap even without the price going higher. Obviously, if that inflation is being used in a way that helps to grow the overall ecosystem, it's no different than any other company that you would have in the stock market, right? It's not a bad thing if you're issuing new shares and you're getting an ROI on those shares. So in this case, if you're issuing new tokens and you're ultimately getting a high ROI by issuing those tokens and growing the ecosystem, it can be good for everything. So last thing on Solana here as we get to the next slide here, what's you know what's the takeaway here? I guess what's the
Yeah,
final
so
takeaway
Eclipse is a
on why
new
Solana is growing so fast? And
Yeah, Eclipse is a new L2 based on, or that settles down to Ethereum. So it's an Ethereum layer 2, but it uses the Solana execution environment, the Solana virtual machine, to process and execute these transactions. And it's become the most deposited to layer 2 on Ethereum in the last week. And it just shows that the whole argument with Solana is it's a better execution environment than any other blockchain. And even that is now spilling over to other ecosystems as well.
yeah, and I think that's the key, right? Again, we talked about what is the goal, what is the trilogy or the trilemma of a blockchain. You have to be secure, you have to be fast, you have to be decentralized, and obviously it's very hard to be all three. And each of these blockchains is tackling one or the other. Solana clearly at this point is, at least in terms of fast and execution, seems to be dominating everything else around there. Okay, but moving ahead here, obviously Solana is not the only thing happening in the world. It's always been this debate of Ethereum versus Solana. Um, Ethereum is not dead, right? The token might be going down, and certainly as investors frustrated with the performance of the ETH token. But how do you look at now kind of the ecosystems of Ethereum and Solana, given again that Solana may be growing at a faster rate, but Ethereum still seems to be king in a lot of different areas?
Yeah, well, I think you have to consider Ethereum as not just Ethereum, the L1, but also all of these L2s that are shown on the graph and all of the others, because it's really one large ecosystem that lacks the interoperability solutions and ZK technology to make this truly work right now. And that's why it's a longer path to get to the end goal. And it will hopefully eventually get there, but right now um, a lot of stuff is still being developed on the technology side. And because of that, a lot of these L2s are um, not being valued at the same rate as other layer one blockchains. So if you're a developer or creating a new blockchain company, it pays to launch an L1 because you can raise more VC money and um, there's a lot of other issues with that in terms of like VC allocations towards because L1s get a premium.
Right. And I think that's the frustration with that we hear from investors is that Ethereum, again, from a relative standpoint, Solana and Base seem to be growing faster at the moment with Ethereum, but Ethereum still has more apps, which we'll get to in a second, and more activity. But the question is always just on the value of Ethereum, right? In this case, as you're showing here, Ethereum being the purple and all the L2s being the pink, that the market cap of Ethereum is still massive relative to all of these other L2s that are ultimately building on top of Ethereum and driving a lot of the recent transactions. So what does that mean on the next slide here then? As we mentioned, one of the things from an ETH token standpoint is that it does get deflationary in times of high activity. Go back to 2020 and 21. The whole reason these other smart contract platforms really started to take off in terms of interest was because there was just a too much demand for block space and not enough of it, and fees got crazy high on Ethereum. Then obviously you had EIP 1559 changed the way Ethereum runs, and now you have all these. You could argue there's a dearth of block space, right, between all these other L2s and L1s. There's probably too much block space now relative to demand. But when things when activity increases and there's all kinds of transactions happening, like we've seen in the last week and a half, 2 weeks, you still get Ethereum to start to burn supply and become deflationary. Anything else on that other than just obviously good for token holders, or is there more? Does this mean anything long term for the ecosystem when you see this deflationary burn?
Well, yeah, this was from 2 days ago, and it was the first time we've kind of seen this deflationary burn happen in a number of months. So that just means Ethereum block space is getting more filled. To do a simple swap on Ethereum now is costing upwards of $50, which makes it unusable for a lot of the everyday people just using it and not larger institutions or larger players like ourselves. And that just leads to the need for more layer two solutions to actually make Ethereum usable again. And this was the issue in 2021 when everything got super expensive and then all these layer twos started coming out. You're finally seeing that demand for layer twos start to come back.
Sure. And just moving on to the next slide here. I mean, again, this is kind of what we're talking about here is that you hear a lot about Solana growing versus Ethereum, and it's definitely true in a lot of different categories that you would look at. But the overall ecosystem of Ethereum is still just massive relative to everything else. And I think this is where investors specifically get tripped up is, separating the ETH token, which is underperforming, versus whether or not the Ethereum blockchain and ecosystem is really dying. And I think it's pretty clear, at least looking at this, that most of the blockchain world is still running on Ethereum in some capacity.
Yeah, and I think it's interesting that a lot of the top tokens that you'll see on CoinMarketCap or CoinGecko are issued as ERC20 tokens on the Ethereum blockchain. And that doesn't necessarily benefit the blockchain much besides some transactions. But overall, like a lot of that total value in stable coins and tokens is actually still living on Ethereum itself.
Right. And when looking at this chart, obviously stablecoins massive on Ethereum and Tron. Tron really only a Tether at this point in terms of the activity happening on it. But Ethereum has stablecoins. You have a ton of DeFi on there, a little bit of NFTs still. Solana really, for the most part, is a little bit of DeFi and mostly memes and DePIN at this point. But as you can see there, I mean just not a lot of like massive winners yet in terms of other projects on the Solana ecosystem in terms of their actual market caps. Moving ahead here, we talked about DeFi. One of the things we talked about on the election, post-election, is what changes, right? Obviously, we haven't seen any real regulatory clarity yet. There's just a lot of optimism on new regulatory clarity with the Republican sweep. But one area that immediately took off post-election was DeFi, largely because one of the characteristics of DeFi is it's easy to value from a financial standpoint. They have real revenues, they have real profits. In many cases, they could start distributing some of those revenues and profits back to token holders, either in the form of token buybacks or in the form of dividends. But over the last 2 years, with the hostility of the current regulatory and political regime, they're basically fearing not just massive fines, but also even jail time for doing anything that made it look like they were offering illegal securities in the U.S. With a little bit of the foot off the throat of the industry here. Certainly a chance that some real applications here can start ultimately taking care of token holders again. And you can see that in the prices here. I mean, this is just 7-day change of many of the sectors within DeFi, from lending to DEXs, again, both across Ethereum as well as Solana and other areas, but just a massive, massive move in DeFi. Do you think this is but one way to think about this, Joey, is really this is just a multiple repricing, meaning all else equal, the multiple as an investor on these earnings expanded because of the potential now for divvying up. But does it actually mean anything for the usage of these applications? Do you see any areas within DeFi or on any chains that you think actually explode in usage now with a little bit of a loosening of this regulatory stranglehold?
Yeah, I don't think anything in terms of like DEXs or lending or any of these like actual protocols will change. But now the assets that are on these protocols, you'll have the ability to have different assets, and you'll have the ability for more real world assets and to be issued on chain, as well as you'll have the ability for different types of DeFi protocols that allow for the issuance of a token for different purposes that were illegal in the US before.
And I think that's a great point, right? Because for those of us who have been on chain now for years and use a lot of these applications, the DeFi rails work really well, right? The exchanges work really well. The lending and borrowing protocols work really well. Staking works really well. The issue is that most of the real world just doesn't care about the assets themselves that are on there. Like, it's great to go on, Aave and post some ETH as collateral and borrow some stable coins and then go out there and buy more ERC20 tokens. Be a lot better if I could take my Tesla stock and use that as collateral and borrow money to then go out there and put a down payment on a home. So ultimately, it's not the rails themselves; it's the assets available on the rails, which again has been held back by regulatory issues. If we can start to loosen that a little bit, and you start to see more RWAs, real world assets, on chain, it certainly opens the floodgates for how useful these applications can be. Okay, moving on. We talked about Solana. We talked about ETH. Uh, Obviously, wouldn't be able to talk about the growth of blockchains without mentioning Base. What are you seeing there?
Yeah, so this is just net flows from blockchain to blockchain of which blockchains are taking in the most value and which are losing the most value over the last month. And Base, Solana, and Sui are really the ones taking in the most value. And a lot of that value is leaving Optimism, Ethereum, and Arbitrum.
Yeah, and real quick shout out to Artemis for this. Obviously, a lot of the other charts we were showing were from Token Terminal, as well as Dune and Bankless and CoinGecko. A lot of places right now where you can get data. Some of the data we build in-house at Arca, some of that we're using from third parties, but you can see, I mean, this is no longer just guesswork like it was 5 years ago. All of this data is available to help make these decisions. So yeah, so Base is getting a ton of flows. We mentioned with Solana, it's a little bit of DePIN, it's a lot of meme coins, a little bit of DeFi. What's actually happening? If you go to the next slide here, like where's the activity happening on Base?
Yeah, so outside of Aerodrome, lending on Base has really seen an explosion in the last couple of months, and this is really driven by Moonwell, which is just another version of a borrow and lend platform. None of them are relatively like that different from each other when you go in and use them. So like Moonwell, Aave, Morpho are and Compound are all these big ones on Base, and they're relatively the same for end users, but it's all in terms of token incentives or other incentives in terms of liquidity and ability to borrow the most amount of money that really drive users to those platforms. And right now, Moonwell is really dominating the Base ecosystem and has grown 10x since the beginning of the year.
Now, is this just leverage, or is this lending being used for anything else? Or is this just a typical take some of your assets that you own on base, post them as collateral, take out stables, and then pour those stables back into other assets on base?
Yeah, I think a lot of it is just looping in DeFi protocols to generate additional yield, which I think is kind of the main way that a lot of these borrow and lend platforms have been used across all ecosystems, and really grown.
Yeah, and on the next slide here, Joey mentioned Moonwell. You can see just again what kind of growth we're talking about here. Still, the absolute numbers, fairly small relative to what you see on Ethereum DeFi, with projects like Aave. But clearly, again, this is what investors are really excited about when we're talking about Solana and Base. It's not the absolute dollars that are involved here, but certainly just the growth trajectory that we're seeing. Okay, moving on to the next here. One of the things that we talked about, I think last month, was talking about how the rise of DeFi, meaning like one of the charts we looked at was overall spot exchange volume was basically 15% of that activity was now on DEXs, down relative to like, call it 1 to 2% 3 or 4 years ago, meaning the overall volume is starting to move towards decentralized exchanges. We haven't seen as much of that on the derivative side, meaning futures and options, but certainly starting to see that pick up again. I think overall, decentralized derivatives exchanges are now about 4 or 5% of total volumes. Where are you seeing the growth there in terms of these perp dexes and the
Yeah,
well,
so Hyperliquid still dominates the perp dex space and is the most widely used perpetual dex. And it is a new layer 1 solution that has a perp dex basically built into it. And because a lot of these are launching as app chains, it's not really on its own, or it's not on a different ecosystem. It's kind of its own ecosystem that can have different applications flourish as well on that layer 1. And so, in my opinion, it's more of a winner take all scenario versus other ecosystems where multiple can thrive, because it's its own L1 and people are going directly there to actually execute trades.
yeah, I mean, even just a year ago or a year and a half ago, DYDX was something like 80% of the overall decentralized derivative volume. It's pretty shocking to see how they fell out of favor relative to the growth of Hyperliquid. I mean, these are staggering numbers. And again, you
Yeah.
mentioned DYDX used to be uh, uh, in Ethereum application, then it spun off and created its own chain on Cosmos. So if this is the future of decentralized derivatives, and they're all going to be their own chain. I mean, how does one stay in the lead here? I mean, what is there anything to glean from this, knowing that Hyperliquid basically came out of nowhere and just overtook the incumbent by, fourfold here?
Well, yeah, I think there's like a flywheel that comes with a lot of these perp dexes because a stronger order book leads to more applications in the Hyperliquid space. And then these applications lead to more order flow. And then more order flow brings more liquidity. And then more liquidity strengthens the order book over again. So, like, in the case of having your own L1, like with Hyperliquid, having more applications or more order flow or more liquidity just completely creates a flywheel where it grows exponentially. And I think you're seeing that because um, 35 different applications are already building on top of Hyperliquid and launching with them, with a token. So you're kind of seeing this whole ecosystem being built out that kind of is a competitive advantage versus other ecosystems.
Okay, and since this is all about investing, obviously this is not investing advice, but looking at the next slide here, Hyperliquid does not have a token yet. It's clearly coming. What are you thinking there in terms of valuation and how to look at this Hyperliquid token when it launches?
Yeah, so this is just some basic like math based on point values that you can get from different perp dexes that trade points essentially, which is AVO and then Whales Market. And right now, most likely a Hyperliquid token is probably going to launch in the like $3 to $5 billion range. Um, and we can go to the next slide because I think that's hard to actually value because Hyperliquid is a perp dex, which it is the largest, which should automatically put it above a $2 billion valuation. But it's also a DeFi giant, which then values it closer to between 3 and 9 to $10 billion. But it's also an L1 that then could be compared to Aptos per se, that puts it at an $11 billion valuation, but it's also a leading L1 because it's the 11th biggest L1, which then puts it in competition with AVAX, Tron, and SWE, which then could value it at $20 billion. And this is all a race because Hyperliquid's end goal is to compete with Binance directly. So it's really hard to create comps for Hyperliquid because it is a perp DEX, but it's also a competitor to Binance. So how do you value it between 2 billion and 80 billion?
Right.
And that's the real issue with trying to come up with a value for Hyperliquid.
And I think it also speaks to the ludicrous valuations of L1s. I mean, shout out to the guys at Placeholder who came up with the idea of the fat protocol thesis, basically saying that all the value will of a blockchain will flow to the layer one, and as a result, we've had infinite funding rounds from venture firms funding every single layer one. Which is why you get these absurd valuations on protocols that haven't even done anything yet. I mean, even the protocols that are basically left for dead still have $1 billion valuation. The ones that are growing are in the 10 plus billion range, like your Avalanches and your Swees, and then the ones that actually, have escape velocity, Solana 100 billion, BNB, Binance 100 billion, and obviously Ethereum 400 billion. I mean, the numbers are just staggering, which is why, rightfully or wrongfully, basically every single project in crypto wants to become its own L1 and be valued as an L1. Easier said than done, though, right? I mean, we're seeing the same thing with Uniswap now launching Unichain. Um, it's clear, at least for right now, the market values L1s higher than everything else. And as a result, you're going to continue to see investors try to pitch you on everything being a layer one. We'll see how sustainable that is over the future. But I think the big question for me, just from a hyperliquid standpoint, is their lead sustainable, right? We've seen so many dexes kind of come and go, meaning they're off to a hot start. They get an absolute enormous amount of attention, some of it because of farming and incentives, and then they die off. Do you think Hyperliquid can actually keep this going post the
Yeah,
incentive? Post
so actually, since their points program has stopped pre-airdrop, which is coming in the next couple of weeks, their volumes have only increased with very little incentive. So I think if anyone will have staying power, Hyperliquid's in a great position because they've built all of this with very little incentive mechanism compared to every other blockchain or every other perp dex that has come out.
Great. Okay, well we'll take it home here on Sui or Sui. I don't even know how to pronounce it. But we talked about Solana's growth. We talked about Base. We talked about Ethereum. We talked about DeFi built on these applications. The token du jour in the last 6 months has been Sui. Everyone's talking about it. Nobody really knows what it does or what's being built on it. Walk our viewers through some of the actual applications and transactions that are actually happening on this relatively new network.
Yeah, so SWE, just in general, for everyone to be aware, is a new L1 that's similar to Solana in that it's hyper fast and very low transaction fee. And it's even faster and lower transaction fees, or has a lower transaction fee than Solana itself. And the big new paradigm that makes SWE interesting is it's built with the Move programming language as the programming language to create applications on top of it. And this is a safer language to write smart contracts in that was originally developed at Facebook. And then these Facebook engineers spun out and created SWE and Aptos. And this basically allows for more secure and the ability to avoid many of the classic Web3 mistakes and vulnerabilities that happen with smart contracts. And that's really why people are excited about SWE is a lot of it is because of this Move programming language. So DEX volumes on SWE are now approaching all-time highs and higher than they've ever been. And if you go to the next slide, this is driven due to Cetus, which is the main AMM on SWE. So you can see the swap volumes have gone pretty much like exponential in the last month. And Cetus now has over about an 85% market share of all of the DEX trading on top of SWE. And if you go to the next slide. So money markets are also on SWE, and most of this is Navi, SWE and Scallop. And Navi is leading the way in terms of assets borrowed and TVL. And then if you go to the next slide, liquid staking is also happening on SWE. A lot of this is with different liquid staking tokens. So this is similar to what I described with Jito earlier, where you deposit SWE, and in an exchange, you get a version of SWE that generates yield for you that can be used across DeFi. And right now, there's a bunch of different competitive people or projects that are competing to be the leading liquid staking token on top of Sui. But right now on Sui, there's really not much going on besides these three subset areas that are essentially copycats of other ecosystems. But a lot of different projects are building because of this new um, programming language paradigm and language that's created that allows for these safer, different applications to be developed on top of it. So a lot of this crazy valuation and growth is basically a promise of new and innovative applications that could eventually be built on top of Sui.
Right. And this is the hard part with the layer one protocols. One is there's no barrier to entry. There's hundreds of these layer ones that are being built. Two is, again, the venture community, because of the massive home run potential of an Ethereum at 400 billion market cap or a Solana at $100 billion market cap. They're willing to fund any and all of these, right? There's been so many failed ones, from EOS to Algorand to Cardano, Definity, Near, Apto. I mean, you name it, right? There's hundreds of these that have started out hot and have ultimately crashed and burned, but that upside potential is so big that that's why these things continue to get funded. Again, we're not making investment advice here, but certainly looking at something like Sui that has a $23 billion fully diluted valuation and a $10 billion current market cap, it's a lot relative to the activity that's happening on there. But again, looking at these charts that Joey just posted, the growth is real, right? There's real growth happening. It's hard to actually create a blockchain that gets used in a meaningful way, though. So, again, Sui, you've probably heard a lot about. Token's doing great. Certainly an up and comer. Very hard to figure out whether or not this really will be one of the main blockchains used over time or not. You have a fair amount of these kind of hitting that $10 billion valuation now, which is an insane number when you say it out loud, thinking about what's actually happening there. But that's the world we live in right now, right? These layer ones are going to continue to pop up. They're going to continue to offer something new relative to others, and ultimately we'll see which ones get the most traction, and ultimately have staying power. So this is a great overview, Joey. I appreciate you going through all these different ecosystems. And again, we'll be back again next month, going over everything that's happening in crypto. Certainly more fun right now. Make crypto fun again. Certainly more